Hello, hi students. In today's session, we'll go through the corporate social responsibility provisions under Companies Act. So as an introduction, CSR, corporate social responsibility, is a process by which an organization thinks for the common good. Okay, so it is not charity, it is a way of conducting the business by which corporate entities visibly contribute to the social good. And generally the socially responsible companies do not limit themselves to maximize their profit, but they also integrate their activities for the social good, right? So they are aware that to continue to have the success for their business, it is imperative to have decently matured society around them, and CSR spend will eventually ensure that they will succeed in the business. Okay, so this is a bit of introduction. Then CSR activities includes but not limited to the programs. You can see in Schedule 7 of the Companies Act, a list of programs have been mentioned which are qualified as CSR activities. So this basically includes any activity relating to eradicating poverty and improve the health care, improve education around the society, any program relating to gender equality, and any program relating to environment sustainability, and any program relating to protection of national heritage, culture, and art, and any measures for armed force veterans, relief funds, and any research and development activities in science, technology, and engineering. So again, these are the list of activities, but not exclusive one, but it's kind of inclusive. So any other activity which is in and around this kind of the social activities can qualify as CSR activities. Okay, so now we'll go through some important definitions under the Companies Act, Section 135. So the first definition is on the net profit, which needs to be calculated as per Section 198. So you know the net profit, you will have the profit and loss account, and you will have the revenue, cost of goods sold, the gross margin, and all the indirect expenses. Then you'll have the profit before tax, then tax, and then after tax you will have the profit. But for to calculate the quantum of CSR funds needs to be contributed. So the net profit needs to be calculated as per Section 198, and this includes any profit on sale of investments. So in the P&L you will see any profit and loss on sale of investment. So you will see whether this needs to be included or excluded. But as per the definition, any profit on sale of investment needs to be included for the purpose of calculation of CSR. And there are some exclusion as well. So any capital expenditure that needs to be excluded. Similarly, any loss on sale of assets and any compensation for loss of property, those things can be excluded. And the CSR needs to be calculated on profit before tax and not profit after tax. So any corporate tax provision also needs to be excluded. Similarly, any profit prior to incorporation needs to be excluded, and any managerial remuneration or profit from overseas branches and any dividend received or paid can be excluded. Okay, so that's the first definition. And second, what is financial year? Because we'll have to calculate the CSR per financial year. So what is a financial year as per the definition of under Companies Act? So for the normal company, 1st April to 31st March is the financial year. So there is no change from that point of view. And if any company newly incorporated, but if the incorporation is before January, then from the date of incorporation till the next 31st March will be the financial year for those companies. And if those companies have been incorporated after January, then it's from the date of incorporation till 31st March of the following year will be the financial year. Okay. And for the companies incorporated outside India, that they can apply and get some different financial year as per their convenience, but they have to apply before tribunal and get it approved. So whatever approved by the tribunal will be the financial year for those companies incorporated outside India. Okay. Then we'll see what are the companies to whom this CSR provision will be applicable. So every company having net worth of 500 crore or more, then CSR will be applicable. So that's one criteria. And second criteria is any company having 1000 crore or more turnover, then CSR will be applicable. Or any company having net profit of 5 crores or more, then CSR provision will be applicable. So there are three conditions. Even if any one condition is met, then the CSR provision will be applicable. So just to repeat, a company having net worth more than 500 crores, then CSR will be applicable. Or if a company having net turnover of 1000 crore or more, then CSR provision will be applicable. Or a company having profit of more than 5 crores, then CSR provision is applicable. So all these needs to be calculated based on the immediate preceding financial year. For example, let's say you are in financial year 24-25. So to determine whether CSR will be applicable for financial year 24-25, then you have to refer to financial year 23-24. So during financial 23-24, if for a company the net worth is exceeds 500 crore, or if the turnover exceeds 1000 crore, or if the net profit exceeds 5 crore, then CSR will be applicable. So if all these three conditions not met, then CSR is not applicable. Okay, so if CSR provision is applicable, then there are certain conditions that the company needs to fulfill. The first one is on the CSR committee. So basically, if CSR provisions are applicable, then the company should ensure a CSR committee is formed, right? Okay, and CSR committee should consist of three or more directors. Out of them, at least one director should be independent director. And in case if the CSR amount, we'll see how the CSR amount needs to be calculated. And the calculated CSR amount, if it is less than 50 lakhs, then CSR committee is not required. Instead of CSR committee, the board of directors can discharge the duty. Okay. Then the CSR committee will be responsible to formulate and recommend to the board a CSR policy. So CSR policy will state that what are the activities to be undertaken by the company, and of course all those activities should be within the scope specified in Schedule 7. And CSR committee should also recommend to the amount of expenditure to be incurred on the activities and monitor the CSR policy of the company regularly. So that's the scope of CSR committee. Okay, then we'll see how the CSR expenditure needs to be quantified. So the board of directors of every company must ensure that the company spends in every financial year at least 2% of the average net profit of the company made during the three immediate preceding financial year. So it's on the average profit, 2% on the average profit, and average should be calculated on the profit or loss made from the immediate three preceding financial years. Okay. And if the company fails to spend such amount, the board shall, in its report, specify the reasons of not spending this amount. Okay. Then there is a disclosure requirement. So the board report should include an annual report on CSR activities, detailing the composition of the CSR committee, the CSR policy, and the CSR activities undertaken. So the report should also specify the reasons for not spending the full amount if the company has not spent the required percentage. Okay. And in case of non-compliance, that would lead to penalties and mandated the transfer of unspent CSR fund to some specific funds like a Prime Minister's Relief Fund. So you have to, I mean, the 2% needs to be spent within that financial year. If not spent, at least it needs to be deposited into some specific bank account. If both are not done, then it is mandated that all those amount needs to be transferred to some specific funds like the Prime Minister's Relief Fund. Okay, then to which companies Section 135 will be applicable? So that we'll go through. So section 135, that gives the conditions needs to be followed from CSR perspective. This section 135 applies to every company meeting the specified criteria, right? So the company means under section 220 of the Companies Act, incorporated under the Companies Act. Okay, and section 220 also applies to non-profit motive companies. That's important. So in the exam, you will have a question saying that if the company is already a non-profit motive organization, whether CSR would applicable. So, yeah, so the answer is yes, the CSR would be applicable even for the non-profit motive companies, because those companies are also registered under section 220 of the Companies Act. Okay, and clause 2D of CSR rule clarifies that CSR activities shall not include normal activities, right? So except for the research and development based companies, for all other companies, the normal activities does not qualify for CSR. So the company need to make some specific activities under Schedule 7 of the Companies Act. Okay, and there are some specific presentation requirement under the financial statement under Schedule 3. So CSR spend to be shown separate line item in the P&L. So in the P&L, you'll have various items. So CSR needs to be disclosed as a separate line item in the profit and loss account. Okay, and in the notes to accounts, we have to specify as a separate para about CSR and detailing the nature of CSR spends done during the year, and what is the gross amount of CSR, and how much the amount have been approved by the board of directors, and how much the money spent for, in case if there are any capex related CSR spend, that needs to be shown separately, and that also will have to specify how much paid in cash and how much not yet paid and what is the total value. And in case of other CSR spends other than capex, that also needs to be specified separately, how much paid in cash and how much yet to be paid and what is the total value. So then on the cash flow statement also, it is prudent to specify the CSR outflow as a separate line item. And in case if CSR spend being spent through a related party, then in the related party disclosure also, we have to show this as a separate line item. And details of amount deposited to any specific fund. Then in the disclosure, you will have to say what is the opening balance of that fund and how much new deposit have been done and how much have been spent from the fund during the year, and what is the closing balance. Okay, so now we'll go through some illustration from the CA final material as well as from CA final exam. So as the first illustration, so as per the provisions of Section 135 of the Companies Act, read with relevant rules, circulars, and notifications related to CSR, discuss the following situation. So here a company is formed under Section 8 of the Companies Act 2013. So under Section 8 it talks about non-profit motive organization. So to undertake charitable activities. So the management of the company is of the opinion that since all of the activities of the company are charitable in nature, the CSR provisions are not applicable to it. So that is their contention. So you are required to advise whether the CSR provisions are applicable to this company. The company fulfills all the criteria listed in Section 135 of the Companies Act. Okay, so which means their net worth is more than 500 crore, or turnover is more than 1000 crore, or net profit is more than 5 crore. So they are fulfilling this condition, one of these condition, and now we'll have to confirm whether, since they are Section 8 company, whether their regular charitable activities would qualify for CSR activity. So the answer is no, because Section 135 applies to all the types of companies. That includes Section 8 companies as well. So CSR activities should be performed over and above the company's regular charitable activities. Okay, then let's go through the second illustration. So here, whether a holding or subsidiary of a company fulfilling the criteria under Section 135(1) has to comply with the provisions of Section 135, even if the holding or subsidiary itself does not fulfill the criteria. So here, the Section 135 will be applicable to those companies that fulfill the criteria, that is the net worth or turnover or the profit before tax. Right. It should be seen individually, not with respect to their holding company or not with respect to their subsidiary company. If that specific entity fulfills one of these conditions, then CSR is applicable. If that specific entity doesn't fulfill those conditions, then CSR is not applicable. So in this case, company B is not required to comply with provisions of Section 135 because their holding or subsidiary doesn't matter. If company B doesn't fulfill those specific criteria, then CSR is not applicable. Okay, so we'll go through the next example. So here ABC is a limited company which has a net worth of 200 crores, right? So it's less than 500 crores. So from net worth point of view, this provision may not be applicable. And this company manufactures rubber parts for automobiles. So the sale of the company are affected due to low demand of its products. Okay, and they've given their net profit and the turnover for the last 4 years. So their current year, that is 31st March 2024, their net profit is 3 crore and turnover is 850 crore. So current year, it's not relevant. We'll have to go through the previous year. So what is relevant is 31st March 2023 would be relevant to determine whether CSR would be applicable for the financial year 2023-24. So even the other 2 years, the March 22 and March 21, that's also not required. So what is relevant is 31st March 2023. Here the net profit is 8.5 crore and turnover is 950 crore. So turnover is less than 1000 crore, so not applicable. Net worth is less than 500 crore, it's only 200 crore, not applicable. But net profit is 8.5 crore, which is more than 5 crore. So CSR is applicable. So hence the company will be required to form CSR committee and follow all the procedures described under Companies Act. Okay, we'll go to the next example. So here ABC Limited manufactures consumable goods like bath soap, toothbrush soaps, etc. As part of CSR policy, it has decided that for every pack of these goods sold at, at the 80 paise will go towards the Save Trees Foundation, so which will qualify as a CSR spend as per section schedule 7. Consequently, at the year end, the company sold 25,000 such packs and a total of rupees 20,000 was recognized as a CSR expenditure. However, this amount was not paid to the foundation at the end of the financial year. So will the amount of rupees 20,000 qualify to be CSR expenditure? So actually, yeah, they've given its qualified expenditure because any contribution to this foundation, Save Tree Foundation, is a eligible expenditure under Schedule 7 of the Companies Act. So to that extent, it looks okay. But as per Section 135, if you have to claim these expense as CSR, then it should be spent. So just by creating the provision will not be enough. So you'll have to spend, you'll have to actually deposit those amount here 20,000 rupees to the foundation. Since at the end of the year this payment has not happened, then the company cannot claim that they have spent this value for the CSR activities. So this 20,000 will not be automatically considered as a CSR expenditure until and unless it is spent, it is paid to the foundation. Okay, so we'll run through the next example. So here, due to the immense loss to Nepal in the recent earthquake, one FMCG company undertakes various commercial activities. So you have to be a bit careful. They are undertaking various commercial activities with considerable discount and and concessions at the related all those activities. So they are going to give some kind of a discount and concessions for the sale of their products. And this activity it's getting continued for 3 months. And now we'll have to calculate whether these kind of activities would qualify as the CSR spend. So here important note is that it's all the commercial activity. So instead of selling their product at 10 rupees, they are also going to sell it to 5 rupees. But still out of that 5 rupees, they have some kind of profit motive and it's pure commercial activity. And section 135, as you recollect, this is, I mean, you have to undertake some specific activities other than your commercial activity. And you'll have to spend as per the schedule 7 any activities. So commercial activity is clearly excluded from CSR spend. So the answer is no, this is not correct. So claiming the all these discount concessions etc. as CSR spend is not correct. Okay, then we'll go through the next example. So here ABC Limited is a company which is covered under the ambit of CSR rules, and as part of the CSR contribution, an amount of rupees 15 lakh was spent as CSR expenses towards the education of a girl child. The average net profit of the company for the past 3 years was 7 crore. So as the company incurred a CSR expense in excess of what is required to be required by the rule. So here 7 crore is the turnover. So 2% of 7 crore comes to 14 lakhs. But actually they have spent 15 lakhs. So they have spent 1 lakh in excess. Right. So the question is whether this 1 lakh can be carried forward to the subsequent years. So the answer is yes. If the company spends any amount in excess of the 2 year in excess of 2%, then of course they can carry forward. But the condition is that in the accounting they have to mention clearly that this excess is kind of prepaid expenses, and in the board note it should be mentioned very clearly that they have spent in excess and that will be adjusted in the subsequent year CSR spend requirement. So in that case, yes, it can be carried forward to subsequent years, and carry forward will happen for the subsequent 3 years, not beyond the 3 years. So any excess needs to be set up within 3 years from the date of the spend. Okay, then let's move on to the next example. So here in the financial year 2011-12, a company had spent rupees 2 crore in excess. And in financial year 2012-13, it set off rupees 50 lakhs from such excess. However, from financial year 2013-14, the company is no longer subject to CSR provisions under Section 135(1), since the company cannot take a benefit of the set of excess amount spent in the previous financial year because of non-applicability of CSR provision. So will the excess amount gets lapsed? That's the question. And the answer is yes. So as long as the CSR provision is applicable, then the excess spend can be carried forwarded. If CSR provision is not applicable no more, then what are the excess spend that needs to be written off? So it's no more eligible to be further carry forwarded. Okay, so we'll go through some of the exam sums. So here the company is formed under Section 8 of the Companies Act to undertake charitable activities. The management of the company is of the opinion that since all the activities of the company are charitable in the normal course of the business, the CSR provisions are not applicable to it. again, it's a similar to the example we already seen. So even if the company as a regular activity does the charitable operations, that's not qualifying as a CSR spend. So you'll have to have a distinct activity to carry out specifically for the purpose of CSR activities. So based on the above discussion, since a company formed under Section 8 of the Companies Act 2013 is a company under the Companies Act and fulfills the criteria prescribed under Section 135(1) of the CSR provisions will be applicable to it. Okay, we'll go through the next example. So KC Limited is covered under provisions of Section 135 of the Companies Act. The company fulfills all the criteria listed in Section 135 of the Companies Act. It has a holding company H Limited and a subsidiary company S Limited. So neither H Limited nor S Limited fulfills the criteria listed in Section 135 of the Companies Act. Advise whether H Limited and S Limited are required to comply with provisions of Section 135 of the Companies Act. So here the answer is no. So as we already seen, the provisions will be applicable to those company which fulfills the criteria, not its holding company or subsidiary company. So here C Limited alone fulfills the criteria. So C Limited, the provisions will be applicable. But for its holding and subsidiary, since they have not met the criteria, the provisions are not applicable or not required to comply with the requirements of Section 135. Okay, so the next example. So for the financial year 2020-21, CBC Limited was within the purview of the CSR provisions of the Companies Act, as its net profit for the financial year exceeded 5 crores. It also satisfied that the net worth and turnover criteria. The company has duly discharged its CSR obligation in the financial year 2021-22. However, due to adverse market conditions during financial year 21-22, the turnover falls below 1000 crore and the company incurred a loss. Its net worth also falls below 500 crores. The company is of the opinion that the CSR provisions are no longer applicable to it with effect from the financial year 2021-22. Yes, so the criteria needs to be checked for the preceding financial year. So in this case, in the immediate preceding financial year, that is 21-22, none of the three conditions have been met. So the company is not required to fulfill the CSR obligation for the financial year 22-23. Okay, next example. So an office building is constructed exclusively for the CSR activity under Section 130 of the Companies Act. The entire expenditure is treated as revenue expenditure and charged to the statement of profit and loss. Discuss whether the treatment of charging the cost of construction of the aforesaid building to statement of profit and loss account is correct. Whether any disclosure as per Schedule 3 of the Companies Act have to be made. Okay, so the answer is yes. So as part of CSR activity under Schedule 7, the company can donate a kind of a building to for the CSR purpose. So in this case, they have donated the building for the purpose of CSR activity. So the transfer should have happened. So it's no longer the asset of the company. So they've built the asset and then transfer the building to any specific organization for charitable purpose listed under Schedule 7. Then this expenditure, even though by virtue of it is a capital expenditure, since the company doesn't own those building anymore, it can be treated as the revenue expenditure and not the capital expenditure. Okay. And so in that case, the general instruction for preparation of the statement of P&L account under Schedule 3 needs to be followed. Okay. Okay, so I think that's it. If you need any more clarifications, please give me a buzz. Thank you.